Hi, this is Jay Norris, author of Mastering the Currency Market. Welcome to the report. Before we get to the charts, I do need to remind you that trading futures and Forex is a risky endeavor and not suitable for all investors. The charts we're looking at are real-time market snapshots and may not be replicated going forward. The charts are courtesy of eSignal. First market we're looking at is the Australian US dollar. Yeah, it's more upside in the US dollar, in the Aussie US dollar today. You had that third close above the January high. We can get rid of that now. So you're very much in the bull phase of the market here. You had a nice breakout. You probably got a little ahead of itself today. Market pulled back slightly here. You can probably see it better on the 240. Market pulled back a little bit. No big deal. I imagine she's pulling back. Let me center that. I imagine it's pulling back ahead of that unemployment number tomorrow. You got the big non-farm payroll number tomorrow. So market taking a little breather. We certainly wouldn't mind seeing a bit of a pullback here. There we go. That's what I want to do. You can see it's still up on the, it's up on the monthly, up on the weekly, up on the daily. So awful strong market. Wouldn't mind a little bit of a correction, a little bit of pullback, but we'll have to see what we give you. You have to be mindful, looking back at that daily chart, that this market did just break out above that old December high, the 2010 high. So plenty of room up above there. Next market, the Euro US dollar. The Euro is a very interesting pair. You're kind of running out of room on the upside. The daily is higher, though. As I was saying, I'd be a little bit leery taking on a long position below that. The November high, which is also our monthly directional line. Yeah, there's the possibility you could break out on the Euro, but how much higher could you go? Well, we'll have to see. Let me pull this chart over so you can see the numbers. There we go. How much higher could you go? I guess 145. But you'd have to get through there first, though. But for now, you can see there's very little momentum on this daily, and I think any breach of this trend line here would spell a pretty good correction, probably at the very least down to that down to that weekly line. So we'll have to see. Big number tomorrow. Definitely a wild card, the U.S. non-farm payroll number. So I think the markets are just slowed down, taking a breather before that. So not a lot of action going into tonight. Pretty slow market overall. Today you had that late sell-off in the Aussie, and that was about it today. Here's your British pound. Let me tighten this chart up so you can see what market we're looking at. Okay, there's your British pound. Not a lot going on here. Actually, you can't quite see how. You can see the last price, but it looks like the candle is really not updating. At any rate, a lot of indecision. You got almost to the middle of this big wide range between approximately 160 and 164. You got up towards the middle of that today, and it came off pretty good. So a bit of indecision here. Also, we could probably mark the bottom of that range. So as we said yesterday, you're in a big line formation. You get in the middle of a line formation, that's a tough position to be in because it could go either way. It's actually your worst trade location that you'll come across for the most part, being in the middle of a line formation, being in the middle of a sideways range. And that's where you got today, and then you rejected, you came right back down. Next market will be, we'll check in on the CAD, dollar CAD. We're looking for 105, the overall target there. See where it's at. And bummer today. The clock just rolled over, so I'm not getting the whole bar. I'm just getting the close. But that's all right. You can see you're below 97 even. I think 95 is the next stop for dollar CAD. How about dollar yen? I think at 5 my time, everything rolls over, and I'd have to restart, turn off the program and restart it. We don't want to do that. We're okay as long as you see that last price. You can see the yen a little bit higher today. You had higher prices. They were rejected initially, but it's holding up okay. what's really cool about the yen here is you're in a position to shift that weekly trend higher. The daily's higher. You shift that weekly trend higher, and you're closer and closer to a monthly breakout. We talked all along about the possibility of that bubble bursting. The bubble did burst, and to me, you got a lot of upside. So I think there's a lot of potential action in the yen pairs going forward. I really like Aussie going forward, and I like the yen pairs going forward. Let's take a look at the U.S. stock market. We'll take a look how the bull is coming along. You got to feed a bull every day. The bear can hibernate, but you have to feed a bull every day, as the old Wall Street saying goes. So we'll see what happened on Wall Street if the bull got fed. And there we go. Very, very indecisive day ahead of the non-farm payroll today. You can see the inside candle, that inside red candle. So market's just biding its time. Everyone knows we got a big number coming out tomorrow at 8:30 Eastern Time. The U.S. Department of Labor's non-farm payroll number, a serious number. So we'll have to see how that comes out. Also, the first of the month is tomorrow. So we'll have to see. You could get the double whammy. You get a decent number on the non-farm payroll, and the 401k money's flowing. You could see some pretty good upside there. So, hey, we'll stay tuned. Thank you very much. We'll be back for the weekly edition of the report on Saturday. Thank you.